$25,000 invested into pretty much any of these different ETFs across the board are not really going to change your or I's life all that much as far as on an income basis. And that's because for the most part, all these ETFs offer a relatively small dividend yield. For example, looking at a really high quality dividend ETF known as VIG or the Vanguard Dividend Appreciation ETF. This ETF has a really high quality basket of holdings and has had some massive growth historically, but only offers a 2% dividend yield, which is not really going to do that much once again on an income basis for you and I. But in this video, we are going to go through the exact math and show you how something like the YieldMax Tesla Option Income Strategy ETF could in fact definitely change the life of an income-focused investor with just investing around $25,000 into the ETF. Now, if this interests you at all, make sure to please drop a like down below and subscribe, and let us get started. So the TSLY YieldMax Tesla Option Income Strategy ETF is an ETF that does not invest directly into Tesla, but instead by using options in a synthetic cover call strategy. This ETF so-called references Tesla and basically writes cover calls in it without actually writing cover calls in it. Now, this ETF has obviously sparked some interest across the board for more income dividend focused investors like myself because of course it does have a distribution rate of around 58%, which of course is far from normal even when you're talking about higher yielding ETFs. And looking at the previous distributions for TSLY since the fund has started to pay dividends, we're looking at anywhere from around $1 on a monthly basis for one single share, or 90 cents down to 44 cents at times, and as of recently around 57 cents per share. And you might be saying, well, $1 or 44 cents per share on a monthly basis doesn't sound all that crazy, but when you consider that TSLY is trading anywhere from around $11 to maybe $15 per share over the past month or so, it really starts to change the conversation. And just to give you an idea on how different the math truly is, let's say we invested $25,000 into the SEHD or the Schwab US Dividend Equity ETF. Now this ETF is super high quality. I actually hold a ton of it throughout my portfolios, and this ETF even actually offers a decent starting dividend yield of around 3.5% to 4% as of current. But still, if we were to spend $25,000 on SEHD, we would only be able to purchase around 357 shares of it. Now, because SEHD pays around 65 to 70 cents on a quarterly basis, let's just say 22 cents on a monthly basis, this means that on a monthly basis, we'd be able to earn around $78.57 by investing our $25,000 into the SEHD ETF. Now, this is where it gets crazy. Looking at TSLY, taking that same $25,000 and dividing it by around, let's just say $11.75, we'd be able to purchase around 2,127 shares of TSLY. Once again, because as of right now, the ETF is so darn cheap. Now, TSLY as of recently paid around 58 cents per share, but once again, keep in mind has even paid upwards of over $1 per share on a monthly basis, and the amount that something like TSLY or a lot of these different cover call style option income strategy ETFs are going to pay is going to change on a consistent basis, because the amount of income that say JEPI or TSLY or any of these other cover call ETFs are going to be able to generate are going to have to do with things like current volatility and like how the underlying or reference stock or ETF trades. But still, if we were to multiply around 58 cents, let's say, by 2127, around $1,234 on a monthly basis from just a $25,000 investment. Now, before you go ahead and say that sounds too good to be true, why wouldn't everyone just do that? You do have a point there. Considering year to date, the performance of TSLY as far as price performance is down around 13.66%, and on the max time frame, this ETF is now down almost 50%. And keep in mind, this ETF has only been around since around November of 2022. And if you're generally not really aware on how cover call ETFs or how cover calls work in general, this is exactly sort of the risk of this strategy. When selling cover calls, you are going to have a capped upside as you see here on the screen. But if the underlying reference stock, let's say, or a basket of stocks that the cover call is being sold on drops down significantly within whatever duration, even with the income generated, the premium from the cover call, the overall investment could potentially still lose a lot of value, which is what we've seen across the board from many of these different cover call ETFs. And to be even more specific, if we were to chart out TSLY next to Tesla, which is the underlying reference stock for TSLY, of course, you can see that at times when Tesla, the underlying reference stock, dropped down significantly in price, which is probably going to happen from time to time because Tesla is a higher beta stock, of course. TSLY closely followed, but then it gets real interesting because at times where Tesla moved back up in price, TSLY didn't necessarily track it as closely. And this is of course because of the covered call mechanics and having that upside capped. So if the underlying reference stock does move up very significantly, because of the covered call strategy, there aren't necessarily going to be as many gains. So even with the massive TSLY dividends that the YieldMax ETF offers, you can see right here if we look at total return, which is dividends plus price return included. If an investor year to date just purchased say $10,000 or $25,000 worth of just plain and clear Tesla stock, they would currently be up around 103.62% on their investment versus if they bought into TSLY, they would only be up around 48.8%. Now I say only 48%, even though that is of course a massive return year to date, which is outperforming most other ETFs across the board. But that being said, even with this strategy, investors would still have been better off just buying into Tesla and sitting on their hands year to date, which is of course an important point to make. But even with that all being said, I still think that TSLY or these YieldMax ETFs still have a place in the market for investors that have a different strategy. For the investors out there that don't want to hold on to a growth stock and don't want to have to sell it, don't want to have to time the market, but instead wants to just buy into an ETF, say TSLY, that instead tracks a growth stock, and by utilizing a cover call strategy, distributes a large portion of dividends on a monthly basis, I of course think that there's definitely investors out there that are quite interested in that. And the numbers are showing that because TSLY and these other YieldMax ETFs have become more and more popular month over month since they came out. Now for me personally, when it comes to TSLY and utilizing this ETF for some income, I'm currently holding on to a few hundred shares and I'll maybe add a few shares here and there when I see fit, and of course when the ETF is right on sale. But with that and the other things that we talked about earlier on in this video, I would never personally make this a large portion of my overall portfolio just because it doesn't really match with my specific risk tolerance and because even the dividends on a monthly basis are a little bit too sporadic for my liking. Now quickly just to recap some of the pros and cons and some of the good and bad when it comes to the TSLY ETF in my opinion, and for income focused, more dividend focused investors. The obvious potential pro is going to be the fact that this ETF, at least historically, has distributed a ton of income on a monthly basis since the inception of the fund. Now a negative when it comes to that is that the ETF is going to distribute a different amount on a monthly basis most likely, and some months might be much smaller than others. Another pro when it comes to the YieldMax Tesla Option Income Strategy ETF is the fact that you can get exposure to writing cover calls on a really expensive stock like Tesla for just around $10 or $20 per share. Now an obvious negative to TSLY, at least so far since this ETF has started, is that the ETF has lost a lot in value over time, but once again that's sort of normal and sort of to be expected when it comes to the mechanics of this sort of fund. Now because this ETF is relatively new, it's going to be really fun to watch for the next few years and see what it turns out to be. And if or if not, the TSLY ETF is potentially offering a long-term buying opportunity for investors that are of course more income hungry like myself. But now I want to hear from you guys down below when it comes to TSLY and using this ETF to generate a ton of income on a monthly and yearly basis. Do you currently have TSLY in your portfolio? And if so, comment down below how many shares you have. If you enjoyed this video, make sure to please drop a like and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.